topic will be investing in inclusive opportunities, inclusive workforce, and inclusive leadership. I'd like to invite the panelists to the stage. Our moderator will be introducing them shortly, so I'll save that for just in a little bit. The panel is moderated by Jennifer Buckley. She's the managing director of Sweef Capital, a Singapore-headquartered independent impact investment firm dedicated to improving the lives of women, men, their families, and communities in underserved markets. Jennifer, welcome. Looking forward to your moderating.
I'm delighted to be here today at this first ESG Investing Summit, and particularly to be with you talking about the topic of investing in inclusive opportunities, which you probably heard a little bit from the introduction, is a topic that's close to my heart, as it is to each of the panelists that are with us here today, Serge, Shuyin, Eddie, and Katina. So from the perspective of myself, why this particular topic matters to our organization is we are an impact investment firm that invests in inclusive entrepreneurs across Southeast Asia, Vietnam, Indonesia, and the Philippines, where ultimately we're seeking to support women's economic empowerment through those investments. And I'd like each of the panelists, I'd just like to take a few moments so each of the panelists can talk a little bit about their own organizations to really set the scene for this discussion. Shall we go in order, Serge?
Sure, thank you. And thanks so much for inviting us to the conference. I'm not sure if I'm one of the individuals who's furthest from Vietnam, but I'm actually based in Canada. And I've come here to represent our firm, Sarona Asset Management. We're a Canadian-based fund-to-fund manager, and we have set up funds to support impact investments in emerging markets. And interestingly, when I was listening to the panel just before, Michael mentioned the importance of the partnership with governments in order to crowd in private capital. We're very proud of being associated with the Australian government. So Michael and Megan, who are Australians, might be proud to know that the Australian government have actually been starting to do this work in Southeast Asia. So Sarona is the manager of a program called the Emerging Market Impact Investment Fund, EMIF for short, and we encourage all of you to check out the website, emif.fund. Provides funding for Vietnamese funds, Indonesian funds, funds from the Philippines and many other Southeast Asian countries to support impact and climate finance investments across the region. I'll pause there, and I'm sure we'll have a chance to talk about some other topics.
Great, I guess I'm up next. I'm Shuyin Tang, and I'm a partner at Panama Capital and also the CEO of the Beacon Fund. Well, how does that work? Why do I have two roles? So Panama Capital is one of the most active and longest standing impact investors in the Southeast Asia region. We have had a long interest in gender smart investing, and actually our journey began, again, thanks to the Australian government, who was already very active in the space through the Investing in Women initiative. And we were one of the first fund managers selected to manage a gender lens fund for Vietnam, Indonesia, and the Philippines. I think that was the start of a journey for us. We also launched the Beacon Fund on the Panama platform subsequently, which is now our flagship gender lens investment product. And, well, as you can tell, you have to listen to yet another Australian today, and it's a real pleasure to be here. I am based in Ho Chi Minh City, though.
Hi, I'm Eddie Tai. I'm a co-founder and general partner of Ascend Vietnam Ventures. We are an unabashedly commercial-focused early-stage VC. Why we're here today is we see that ESG and impact can actually juice our risk-return profiles, and I'm very excited to talk about that. Our journey, though, on that path is still a long one. We are early, and we feel very fortunate to have had early support from the Emerging Markets Impact Investment Fund, Investing in Women, IFC, and others who have been very generous, not just with their money, but with their time in getting us up to speed.
Hi guys, I am Katina, Dell'Acqua-Lubich. I'm representing Virtual Internships. We're a portfolio company of Ascend Vietnam Ventures, so I can bring the perspective of being on the receiving end of equitably distributed capital. So Virtual Internships is bridging the gap between education and the workforce Our product is an employability and upskilling curriculum with an internship component at its core. It's completely virtual and it is customizable and highly flexible, so that enables us to reach a greater range of students and learners in their early career journeys.
So I think you can see we have an amazing group of experts with us today. And just to connect some dots, Sweef Capital exists today also through an investment that was made through the Australian government's investing in women, and also EMIT is one of our current investors. So lots of shared connections here. So panelists, what are we trying to achieve by investing in inclusive opportunities, workforce and leadership? As we think about investing in women and underserved communities, what is it that each of your organizations is trying to contribute in doing that and investing in a country like Vietnam? Why don't each of you take that in turn? Should we start at this end?
Sure. Not an investor myself, of course, but I would probably answer the question through metaphor, if that's okay. Wise person once said to me, looking at sports, particularly soccer across the world, if you consider everybody who plays, the best players are not playing. They may have natural talent, but they don't have the same access to competition, to training, to coaching, et cetera. And can you imagine what the sport would be like if those people were all participating? And it's similar in business, but I would say even greater possibilities as we have really intelligent and talented and creative people who might not have the same access, and what opportunities are there if we can get capital to those individuals.
Yeah, I mean, we want to find good opportunities wherever they are. If we believe that talent is evenly distributed, but opportunities may not be, then we can look at those underlooked opportunities. And actually, very early in our journey, our very first investment was with a woman co-founded startup. And then our subsequent 19 investments were not. And at the end of that first year, I looked back and figured that math out. We hadn't been tracking up till that point. And I said, Eddie, what's going on? If talent's evenly distributed, why you only got 5% here? So we started doing some simple tracking and some other tweaks, and saw that proportions improved, and started to see early benefits to it as well in terms of, and I could talk about this more later, but in terms particularly of risk profiles. By investing in diversified teams, holding everything else equal, you manage a lot of risks, and that shows in the numbers so far. Yeah, I'll keep it there for now.
Cool, thanks, Eddie. Yeah, so I mean, I think there's a wealth of information out there in research which shows how investing in diverse teams actually is, a smart thing to do from an economic perspective, and also the right thing to do. But I guess, maybe let us share what made the difference for us, right? What was really the catalyst in getting us started on this journey? It's actually a little bit similar to Eddie. So when Padma Capital was founded, 12 years ago, I think one core part of our DNA was this idea of leveling the playing field. But interestingly enough, actually, I have to admit, we didn't really think about gender very intentionally at that time. It meant leveling the playing field in terms of providing more economic opportunities for low-income communities, right? So we saw that whether you're a low-income consumer, unfortunately, you were subjected to receiving, we used to say, the worst products with the worst service at the worst prices, right? Or suppliers were, trapped, unfortunately, in very inequitable supply chains, right? Which meant that they only received a very small fraction, right, of the ultimate retail price. So those were the types of, that was the leveling of the playing field that we were trying to focus on at that time. But then we actually did a similar exercise to what Eddie just described. We actually looked back at the portfolio of our first fund and were like, oh my goodness, right? We've only got one female CEO amongst all of these 14 companies. And actually, in terms of the board composition as well as the management team composition, we actually were investing in predominantly, all male and or majority male teams, right? And I think that was, well, I mean, I think then the other piece of that was that actually the customers, though, of these businesses were actually predominantly female. And I think that was a bit of, we saw that there was a clear disconnect there, right? And that would be missing something, right? From even a business kind of opportunity sense, right? What were we doing investing in these, non-diverse teams, right? Yet trying to actually reach quite a diverse audience, right? In fact, a predominantly female audience. And it really sparked a lot of conversations for us and got us started on that journey to try and, I guess, level the playing field in a different way as far as gender and diversity is concerned.
Perfect. I was thinking of maybe an example to make this come alive a little bit in terms of responding to the question. We launched a fund-to-fund with investors from mostly North America in 2013, but also with support at the time from the Canadian government in a program called Infront. And part of that program had a technical assistance facility that allowed some of the SMEs to use their knowledge of the local market and their businesses to essentially make more impact in their businesses and how they approached it, particularly as it related to women and underrepresented groups in those communities. One example that comes to mind, there were 30 grants like these that we offered those SMEs, but one example in the region that comes to mind is a company in Indonesia that was involved in the production of dairy products. And they were a pretty big company. They were focused mostly on selling their products, yogurt products, milk products, in supermarkets, modern trade, I guess, retail markets. But they saw a huge opportunity in selling to underrepresented groups in local communities. The only problem is they didn't have a product or distribution model. So one of their middle managers had this idea: what if we empowered women who lived in those communities to go and sell their products door to door and kind of create a distribution in those communities, kind of an Avon-like model for those of you who are aware of that approach. So we provided some funding to test it out. They hired 50 women from those local communities who went door to door. It was supposed to be a 6-month program. I'll cut to the chase. After about a month and a half, they stopped the pilot. They said it went so well that we decided to expand it right away to 500 women across Indonesia. Today, I believe about a quarter or a third of their income comes from that program. And just think about that. This is a business trying to make money who thought, how do I get a nutritious, important product in the hands of underrepresented communities, particularly in rural areas, and they found a way to do it and make money at the same time. And that's what Sarona wants to support, is fund managers like the ones on the stage who are investing in companies like Katina's company, who are essentially making a difference and innovating while also making money for shareholders.
Serge, what a great example. And it would be great to hear from the other fund managers on the stage on, getting practical. What are some gender-smart approaches that you've been using within your investments and how you're thinking about your strategies?
If you don't mind, I'll go first, because I believe Patamar's probably a little farther along here than we are. But we got started very simply. We just started tracking in our pipeline gender disaggregated data, which companies were founded, had a woman co-founder, which were not. Looked for parts of our pipeline where there might have been undue bias one way or the other about certain companies getting knocked out or kept in more than other segments. Trying to understand from there, was there something obvious, some sort of explicit bias or implicit bias that we were introducing that was causing that? So these little tweaks by themselves, and pretty much that's it, helped drive our numbers from our first fund from that 5% I mentioned of the first 20 companies to about 20-25% by the end of the first fund. So that was cool. That's obviously not enough. There's more we could do. So we went actually through, thanks to various partners we've had anti-bias training. We've had the opportunity to work with women entrepreneurs to get them more investment ready. Because one of the experiences we discovered from our first several years is that many women entrepreneurs found they didn't have the same access to networks, knowledge, and community that they felt their male counterparts did. So we sought to address that gap, thanks in part with funding from Investing in Women, held incubator, accelerator programs, other training programs, which out of those, actually, the very first batch, we ended up investing in one at the end of that program. So immediate benefits out of that. That's about the extent of it, really focusing on having women in leadership and ownership, with the idea that change, direction, culture of a company starts at the very top. And if you have, a senior leadership all men, then it's very hard to see the diversity you need. And the diversity is important, yes, for its own sake, for women's economic empowerment, but also because if you want your companies to attract the best talent and they're only hiring one gender or the other, then there's something missing. That was our view. And again, I think it's showing so far, although we're only 8 years on this. So.
Yeah, absolutely. I think, thanks for asking that question, because I know that many people actually bought into this concept of, yep, backing diverse teams makes sense, et cetera, but then where to begin, right? And I think sometimes there's this, a bit of, and we suffered from it too in the early days, right? A bit of this analysis paralysis on what to do first. So I think my overarching advice is, just get started, right, in simple ways, and don't let the perfect be the enemy of the good. But let me kind of give three, hopefully rather practical things that everyone can begin to, or consider implementing in their own organizations if they are an investor, that we did in our own early days of our journey. So I think number one, a bit like what Eddie said, get the data, and measure what matters, et cetera, et cetera. I think it was getting the data that I think was the catalyst for our own change as an organization towards supporting more gender diverse teams. And I think one nuance, additional point that I would like to bring out is I think even asking for this information, right? So whether it was, say, Serge asking us, right, as a GP, or whether it's us asking Katina, a company like that, hey, we're interested in this kind of data, that actually, it sounds very trivial, right? But actually it shows that this is important, right? This matters to somebody. And I think that can also spark a larger conversation about, like, oh, wow, it can be a wake-up call for many people, not just, your own organization. The second thing I would say, or that we did, right, which we found extremely helpful, was incorporating, questions around, say, gender, diversity in our due diligence process. And I think for us, there were actually two schools of thought, I would say, when we first started on this process. I think the first school of thought was like, hey, tell your let's give the investment team some very tangible questions to ask, right? Let's ask A, B, C, D, E, F, right? So that we are doing this in a rigorous and structured way. That was one school of thought. The other school of thought was a little more like, oh, that feels a lot like checking the box, right? Also, there's so many different questions to be asking as part of due diligence, right? We don't want this just to be, forgot, like, oh, quick, here's the gender questionnaire, let's do it right at the end. So, there was lots of healthy debate. Ultimately, I think we adopted a more organic approach. It was actually a bit harder, right? Because that meant we had to really train our different team members to think about what were the relevant questions, right, to ask when it came to gender. So, for example, they would, say, deep dive into, when asking about, say, customer demographics and behavior, of course, how many of your customers are female? That's a very obvious question to ask. But then looking deeper, like, were there any differences, say, in, CAC or LTV, right, or customer loyalty, So actual, again, I guess, things that we would ask about as part of a normal due diligence process, but then looking at it with a gender lens or gender disaggregated view. That was very meaningful for our due diligence process, and I guess, gave or empowered our investment team to feel like, hey, this is actually useful information, right? We want to know this, we want to know this stuff, right? Not more as a kind of compliance or ESG type of exercise, which I'll have to admit sometimes can get a bit, fall down a bit down the priority list, right, of the investment, managers. And then the third point that I think was very powerful for us was turning the spotlight on ourselves. So looking at our own practices as far as diversity and inclusion were concerned. And I think going through that process, right, of challenging each other's biases, also developing, I think, a much more diverse team than we were, say, 5 to 7 years ago. And I think all of those different, practices, I think, helped us, it's a never-ending journey, but I think helped us at least get to where we are today.
Sorry, if I could jump in real quick. Your sharing just reminded me of 3 very quick snippets I want to share. So that asking the question actually can influence, and as well as asking the question before we give them the money can have influence. So first, quick scenario, real situation, excuse me. We talked to two founders of a company, man and a woman. The man was talking on and on about how great the co-founder was, but I look at the ownership structure, and he had 90% of the company, and she had 10%. It's like, well, if she's so good, why does she only have 10%? And the very next conversation we had, he said, oh, hey, Eddie, we've increased her share up to 20%. So still 80-20, not equal, but yeah, that was an improvement just from one question. Second example was we actually used the lever of our money, and there, again, a startup that had a male and a female co-founder. The female was part-time, but they had talked generically about having her move to full-time, and but they had to sort out details on the numbers and things like that. And I said, hey, I'm not going to give you the money. I have to speak more slowly. As a condition precedent to closing the investment, I want you to finish this conversation and have her join your team full-time. She was outstanding. She was like a perfect bio, background, experience, et cetera, to join the team, work on this product, and complement him. And within a few weeks, he had finished that agreement, and we were able to close the deal. Third, quick example, even after investment, even a question or a comment can make a lot of change. So I was talking to this gentleman who had founded a company in Web3. He had increased his team to 12 people. I looked at the picture, all men. And I said, hey, dude, I use these words actually because there's the two of us. And, hey, dude, why is it only dudes? And that was it. I didn't like hammer him on the topic, but I just called that out. And then the next time we caught up about 9 months later, he said, hey, Eddie, I've expanded the team. We have 25 people. A quarter of them are women now. Aren't you proud? And I'm like, yeah, I actually am proud. Good job. So asking the question is really impactful, I think.
Yeah, I agree. We really need to ask those questions if we're trying to drive change. And, you know, we've had some great examples of Shuyin and Eddie's organizations thinking about different ideas and initiatives of how to integrate gender in smart practices. I guess, Serge, for the limited partners, the investors in the audience that are working with funds or, you know, maybe through that thinking about the underlying portfolio companies they're working with, have you got any thoughts on, like, it would be great to hear from the Sarona's perspective what gender inclusive kind of practices you're working with to support those fund managers and their portfolio companies?
Sure, and I might combine my answer with that question and the previous question, which I think are kind of connected in some ways. And I do understand we need to make it practical. We want to make sure that you can go back to your companies and find a creative way of applying what you've learned here. So if I can just share 3 points that are important in that regard. First is thinking about where your gaps are on the gender side. So first, take stock of where your company is at. The second is really to check your biases at the door. And I'll give you some examples on that point as well. And the third is take action. So just on the first one, Sarona is essentially selecting fund managers that then invest in companies. What we do when we do our due diligence, particularly when it comes to impact, when it comes to gender, and when it comes to climate, we do an assessment of where the fund manager's team is, as well as its investment practices, and identify where they're at and where the gaps are to what the ideal will be. We will never be able to find that unicorn that has it all. Our job is to figure out where the fund manager is and then identify what actions need to be taken in order for them to become a better, more impactful fund manager as a result of receiving our capital. So the same is true with companies. If your company is in a particular spot in its evolution, your first job as a manager or as a founder is to take stock of where your gaps are when it comes to gender, when it comes to climate, and when it comes to impact. Figure out what you can do as an entrepreneur to fill those gaps. Once you've identified the problem, the next thing you have to do is check your biases. So I'll give a concrete example. Again, here from Southeast Asia. I won't name the company nor the country because I don't want to embarrass the the company in our portfolio, but this company went through a gender assessment of their company. The first thing they told us, this was a financial service company, when we spoke to the management team, which was primarily all men, we asked them what they thought of why there weren't more women in managerial roles within their firm. And their response is, well, women are lazier than men. That was their comment. Not true, but that's what they said. And we said, the next question we asked them is, why did they think that? Why was that their response? And they said, well, because women take more time off than men do. And then our next question is, well, on what basis are you making that decision? He says, well, we just know. I said, well, why don't we give you a little bit of homework? Why don't you start to take stock of who takes vacation days and then come back to us in a month and let us know what you find out, which they did. They came back with their heads between their heads down, I guess, at this point, and said, we made a mistake. We apologize. But they thanked us for giving them some homework, because what they discovered was that not only were women taking less days off than men, the reason they had that bias is because when women took a day off, they noticed productivity went down because the men weren't working very hard in those branches. So as a result of this action, they actually implemented a number of changes, including a managerial program for women, promoting more women into positions of power, and their organization has been striving ever since. So I know that it's a simplistic example, but it's an example I think all of us can learn from in terms of checking your biases at the door. The third one is taking action. So if you've identified your gaps and you've checked your biases at the door, the third and most important part is just take the simple actions. So at Sarona, we're in the financial services industry. It is challenging to find women who are working in this space because the ratio is like 80% in this space are men and 20% are women, but they do exist. But you have to make an effort. You have to work towards finding people who will present a more diverse and equitable workforce. It's possible, but it requires effort. So taking action, making concrete targets part of your decision-making process, and monitoring and managing those over time is really important. So those are 3 examples, and hopefully I've inspired some of you to check your biases, take action, and make sure you identify those gaps within your organization.
Thanks, Serge. For the entrepreneurs in the audience, I think it would be really good to get a perspective from Katina and to actually hear what it's like to be a leader within an early stage business, integrating inclusivity into your organization. And it would also be, we've got these investors that are telling us about the great initiatives that they're working with in their organization. It would also be great to hear from your perspective how your investors are supporting you in these inclusivity areas.
Yeah, sure. So I think we're fortunate that we have really great support from a lot of the investors on our bench. But like Eddie was saying, it's full life cycle. It is in the due diligence process, we are asked questions about both our team and our product, making sure that we have a lens of equity as far as who we are hiring and our compensation structures, and then which learners we're trying to access through our product. And then that doesn't stop once check has been received. We're revisiting it annually, quarterly, to answer some of those same questions. One of the challenges I think we always have in early stage businesses is that nobody ever has time. So I'm sure many in this room have worked with founders before, and it is, once you've launched a great product, then, if you're going to be successful, then you're just keeping up. And this isn't necessarily top of mind. And we had an investor once, it was Eddie, who came and looked at one of our sales decks when we were still seed or pre-seed and said, hey, you kind of have a glaring lack of diversity in the pictures of students and learners that you have in one of your sales decks. And I can almost guarantee at that time that we were just so proud to have a deck with consistent branding because there was a lot going on. But it was absolutely right. And I think one of the things that our investors help us with is just holding up that mirror. What we were saying earlier about just asking the question. And I think probably since then, we've not had a single deck, pitch deck, sales deck that's gone out with that same glaring lack of diversity because we learned. So that was really valuable. Other support we get includes networks, access to opportunity. I think in many ways it's 100% due to our investor network that I am here today and learning from all of the people in this room. So it's, we get this kind of support and the perspective, and then we've also had access to opportunities like coaching. We've been connected to different nonprofits and NGOs that support investing and product development through an equity lens. So face a lot of these challenges, but we're very fortunate to have networks that have supported us through it.
And I'm sure there's a lot of people in the audience that are thinking about metrics, like they're hearing about these initiatives, but then thinking about how are we tracking performance in relation to these inclusive and gender smart approaches. And I think we probably have enough time to be able to get that perspective from the three angles. So maybe starting at the fund manager level, the LP level, Serge, as you think about your portfolio and thinking about measuring gender equality and social inclusion in your fund of funds portfolio, what metrics are you using?
Yeah, so we've been in the business for 13 years. So we've started off as neophytes, and then we essentially developed our impact reporting over the intervening years and really tried to connect to our impact goals. So one of them is empowering women. And we use that language very specifically because it's not just about hiring women, not just about thinking about what's the percentage of women who are in the workforce, but also ensuring that women have a voice during the decisions being taken. So at the board level, at the senior management level, at the manager level, and at the employee level. So we do track those metrics. We track the percentage in each of our 200 plus portfolio companies across our portfolios. What is the percentage of women in each of those categories? And then we have a conversation with our fund managers, two of which are on this panel, in order for us to kind of understand what stories lie beyond those metrics.
Thanks, Serge. And Eddie and Katina, since we have the fund manager and one of the portfolio companies here on stage, I think it would be interesting to hear both of your perspectives on the metrics that you're applying.
We're early, where Serge was 13 years ago. We probably are around there now. We really do focus first and foremost on the women leadership and women ownership of equity. Most simplistically, does the company have a woman co-founder, and what is the percentage in our portfolio tracking toward? And getting. Fortunately or not, the industry that I'm operating in has a very low bar. Depending on who you believe, it's anywhere from 2 to 12% have a woman co-founder, depending on what year, what geo, how you're measuring. So if we can get to 20%, 30%, that's already great from our perspective. But ultimately, it's the long-term result. We can't just do this for its sake. We need to show that it does drive better risk-return profiles. So we are looking at the overall performance of the fund, disaggregated by gender, not just returns, but the variance of the composite portfolio companies in each segment. And even if, for example, the two buckets are the same on return profile, but let's say the all-men profile has a lot more losers and maybe some more winners, but the other ones are more reliably generating good returns, then that is a good proof point. So. And then finally, you asked about metrics, but towards our mission overall as a commercial investor and our mission to be more inclusive in our work, individuals' narratives, the actual stories of successful entrepreneurs it's not a metric we can track per se, but building those stories together or being a part of that journey and then helping them share that story with the world is something that we do. So there are kind of vanity metrics or quasi-vanity metrics around press coverage and audience and things like that. But so that's how we triangulate right now. I'm sure you asked me this question in 2 or 3 years, there's going to be a lot more to it than that.
I'd actually love to add one more dimension. I think I know we're meant to go into Katina next, but I think The one more dimension that I think we've been trying to grapple with, right? I totally agree with what Serge and Eddie have been saying, like definitely important to track, women on boards and or other underrepresented groups on boards in management teams, et cetera, ownership. I think it's interesting, right? When we talk a lot about, say, women's empowerment, right? And ultimately, I think in many ways with gender smart investing, we are trying to, or, diversity and inclusion, we are trying to shift power systems, right? And systems of power and change power dynamics in the investment world. And how do we measure that, right? Or what are the metrics that could be relevant? It's a very interesting question. But I think one thing that we've done is implemented, I guess, more feedback loops and systems for actually our entrepreneurs, right? Who actually, whether they get investment from us or not, actually. So even the ones that we have to unfortunately reject, right, or say no to their investment proposals, actually get feedback from them through an anonymous survey. And I think in that small way, I think just measuring, I think not just like, hey, how many female entrepreneurs are getting capital, but really are there, is there level of control and, sense of control and autonomy over that process? Is that actually shifting? I think that's something that we're very interested in measuring as well.
Yeah, metrics-wise, we get asked about both our team and our product, as I've been saying, and we've been asked about, the ownership percentage, as these guys are mentioning, and then from the product perspective, it's not just which students are we reaching today and what's the gender breakdown there, but also our investors have helped us kind of set up, well, if we have a long sales cycle and a long customer life cycle, what data points can we start tracking today so that we can demonstrate outcomes a year from now or 18 months from now. So taking both a today and a future perspective towards metrics.
Thanks, Katina. I think now might be a good time to get some questions from the audience. And we have one already there, or two.
Hi, amazing discussion, thank you. My name is Kat Tao-Nguyen. I work in leadership that's focused on purpose, justice, and inclusion. And we have a definition of inclusive leadership, which is a consistent practice that requires active contribution towards reducing inequity for individuals and systems, whilst creating a sense of belonging and sustaining that for individuals. And with our work with executives around the whole world, it's extremely difficult. And I think implicit within that is a difference between diversity and inclusion. And, the research shows that cash flow per employee, there's a massive uptake when it comes to inclusion as opposed to just diversity. And so, if diversity is a static state, but inclusion is when people actually can recognize and celebrate and leverage differences. And so my question is, how do you help your stakeholders, companies, in order to develop inclusive cultures where they actually genuinely value differences? And because we find that that's extremely hard to do, and that's where innovation, creativity, and value is unlocked as opposed to diversity.
Can I?
Sure.
So, thank you for making that distinction, because yes, diversity and inclusion are very different and they are complementary, yet at the same time, you can have diversity without being inclusive, and you can be inclusive without having diversity, which sounds a bit counterintuitive, but it's true. So I think part of it is setting the tone within your organization and ensuring that you figure out a way to give voice to those that may not be in positions of power within your organization, for them to be able to influence their roles. Sarona is a bit of an interesting organization in the sense that we're not very big. We're just 20 people, but yet within the firm we have staff from Ghana, Nigeria, Turkey, India, Philippines, Bulgaria. I'm the token Canadian on the staff. But if we take the time to listen to all these diverse voices when we make a decision, I guarantee you the decision will always be better than if we don't. So it's about creating that space where people feel appropriately protected to be able to voice those opinions, despite the fact that they may have a different opinion than yours. And as a manager, as a executive, to value it and sometimes even change your decision. We're going through, Sarona's going through an executive coaching. We have 4 partners. And I just went through mine just before coming here, my first interaction with the coach. And one of the comments that came through is I changed one of the respondents said, I changed my mind because of something I heard from the team. When we think about a CEO, you think about a CEO who goes up and says, I know what we need to do. We need to go this way. But a good CEO listens, I think, and incorporates and may change their minds based on what others are telling them. We won't always make the right decisions, but at least we're including other perspectives. So I think it's a really good distinction you're making, and I'm proud that you raised that, because we often forget that creating an inclusive culture leads to outperformance as a firm.
Are there other comments? Or
Sure, yeah. I think modeling, embodying it ourselves is important, and we try to do that in some of the same ways as well. In terms of supporting portfolio companies around building an inclusive culture, we try to do that right after we close the investment. We have an onboarding process where we sit down and workshop with them half a day, and we cover a variety of topics, but there are 3 pillars of topics that we particularly focus on. The very first one is on organization. Observing that people is typically the strictest, toughest bottleneck for long-term growth for a company. And from that, we break it down. We start with culture. How do you define your culture? What are the behaviors that your people, from bottom to top, top to bottom, engage in that actually represent the culture you want versus maybe the culture that exists, but you don't define it as such? Figure out what needs to start, continue, stop. Define that very clearly and make sure that's embedded through many parts of the organization, but especially on hiring, onboarding, and retention. We end up having people consults with these companies after that. We don't do it for all of our companies. Some are already a little more advanced in considering what their values are. But whether they are 2 people or 20 people large at the time we invest, we have those conversations right away. As I think most folks in the room know, the larger the organization gets, the harder it is to change a culture. And often, it's not the first thing at the top of the mind of the founder when they're trying to find product market fit, get their first customers, what have you. But yeah, the sooner they start thinking about it, the better.
so do we have other questions from the audience? Is there one at the back? No.
Hello, my name is Yum. I'm a consultant of ERM Vietnam. So I have a question regarding to the inclusive opportunity workforce and leadership to all of the assets like the fund here. So the question is, recently we see trends of layoff, and many people are losing jobs. And do you see, is this most important topic to focus regarding to this aspect? And how do you see the fund can help to reduce the impact from those kinds of layoff, and also like the trends of applying digital, and many people like having catch up with the trends and losing their opportunity to continue work?
It's obviously a tough time, right? So I think I think we also see what you're seeing. I think from us, we do see there's a gender aspect to that too, actually, that we've noticed, which is that actually women do tend to be in a lot of these, unfortunately, lower paid, more contract-based types of employment roles, right, where they actually are more susceptible to these types of impacts, right? And I think that's something that we've been very conscious of in many of our investments. So, for example, in a recent investment that we made in a retail business, again, I think as is typical in many retail businesses, the frontline staff are predominantly women. So actually more than 80% women, actually. And again, typically, I think in frontline retail, I mean, these jobs are not the most secure jobs, not the most high-paying jobs. And in this case, but at the same time, I mean, I think these workers are so essential to the long-term success of the company. I mean, they are the direct interface with the customers, and they are in many ways the backbone of the business. So it's so what we did in this particular in this particular investment case was actually incentivize, or we created an impact-linked structure which incentivized the company to increase the retention of this frontline workforce, and basically try and protect and preserve these jobs in essence. And if they did that, they would actually qualify for more preferential investment funding from us. So I think maybe that's it's quite a new type of financing structure for Vietnam, I would say. But this kind of impact-linked finance and really trying to recognize not just, say, the women leaders, which is super important, but also the frontline and more vulnerable populations. I think that's important for us as well.
Thank you. Now we're running out of time. And so I think we've heard a lot about different initiatives from each of you in the inclusivity area. If there's just one thing that people in the audience can do today, if they want to pursue social inclusion in their organizations, could you each just give something very quick?
Take stock, figure out your gaps, figure out your biases, and take action towards filling those gaps.
Yeah, I think this is another type of change management journey, right? So I think convincing your key stakeholders, whoever that might be, that this adds value to your businesses and your business and your process, that is, I think the core, and that leadership is required, that buy-in is required to really make things happen.
Work with like-minded individuals to go along the journey with you. And let me just do a quick plug. We are investing very actively right now. One deal a month. And everybody, if you're in this room, you're already ESG-minded and inclusion-minded. So email me at eddie@ascendvietnam.com if you want some money.
I would say don't underestimate the impact of a single conversation. It's a theme I've heard a couple of times today, and that can be a conversation where you are sharing or listening, whether you are influencing someone else to have more of an equity lens, or whether you are moving along on your own journey.
Thanks, everyone, and please feel free to come and speak to any of us if you want more information over time.